In today's video, I'm going to give you insider private lender tips from one of my lenders who's personally lent us a couple $1 million across multiple markets. Let's dive in. Earlier this month, I ran a totally free networking event that was open to the public. I had some of my folks from CCF come into town to hang out. I invited some of my lenders, as well as open it up to folks on my email list and Instagram. We had right at like 75 people RSVP and 50 plus show up. So thank those of you guys that showed up and didn't RSVP and not. It was a super solid day. I was joined by Cole Rudd Johnson and Sherrod, the founder of Simply, and we really got into what's working in real estate right now, as well as lessons from just my past 10 years going direct to seller. I was fortunate that one of my private lenders came down to hang out with just my CCF folks the following day, and he shared kind of some insider tips and tricks about why he's invested with me, what projects he approves but doesn't, as well as how to find guys like him that I thought y'all might find helpful. I was a little nervous with him hanging out with us, with some of our guys throwing around how much they pay for private money versus the deal he gives me. But fortunately, he hasn't emailed me yet to raise my rates. The first thing that he really pointed out is that most private lenders are investors themselves. The reason he started lending was he was unable to find deals in the market he was in that made sense, and he wanted to keep his capital working. Which I hadn't really thought about it, but when I look at the other guys that have funded projects from us, that theme holds true. It's folks that enjoy real estate. They want to be in and around it. It could be they're just not finding good deals, or it could be they're retiring, but real estate is where they made their money. So it's where they want to keep their cash busy. So the next time you meet somebody that's retiring or struggling to find deals that make sense for them, you might consider throwing out the question, have you ever considered becoming a private lender? When it comes to whether or not he'll fund a deal or not, you look at kind of the basics, right? Does the project make sense? Is there equity? Is there margin? Is it in an area that's not a total war zone? But he said the deciding factor for him, as somebody that's been through some economic downturns, is can the property cash flow as a rental, or can it at least cover its costs? Which is super interesting if you think about it. As a private lender, the worst case scenario is we try to give the project back to them or they have to foreclose. As a real estate investor, it's always a good idea to have multiple exit strategies should values drop, or like you're unable to sell the place for what you're into it for. I think it's extremely wise to look at the deals we're taking down of, if I can't sell this, what are my other options outside of just filing for bankruptcy? The third piece of wisdom we got from him came down to compensation structures. It's pretty common in the real estate space for acquisitions people to be paid something like a percentage of net from title or wholesale fees. And he had a really good point with that structure of, let's say I wholesale a property and I make $10,000. My deal with my acquisitions manager is that they're going to get 10 or 15% of that gross profit spread. Doesn't sound like a terrible deal. I'm making 10,000. I'm paying out $1,000 to 1,500. So what I'm left with is 8,500 to 9. His point was that the cost of acquiring those goods should likely be considered in there as well. If our cost to find that particular property was, say, $8,500, that sucks for you as the business owner in that structure. The whole conversation spurned off of one of our CCF guys talking about an employee he had in a compensation structure that could get out of hand pretty quickly. And I thought that insight of considering including the cost of goods sold, including marketing in that compensation structure, made a lot of sense. The last thing that I want to throw out is one of my personal kind of takeaways or lessons from being in business. We were talking to this room of like 50 plus folks, and somebody asked the question, like, do you guys basically just share all of the mistakes you've made? Is that where all of kind of these lessons and this content comes from? And the honest answer is yes. Like there wasn't some roadmap I followed or my business partner Noah followed on like step-by-step how to do this. Now we've done our best to put out a lot of that content, but we're still learning and making mistakes. I've got a partnership that I'm a minority owner in through one of my entities, something like roughly 12%. And we've got a situation that I've never ran into that I'm not a big fan of. The partnership had a 12-month note, and we're headed into like month 10 on that note, meaning there's like 45, 60 days left to get this particular project sold. Now, I was on a meeting earlier this week of like, well, what are we going to do about it? And my honest opinion was fire sale it or refinance it. I personally have never been nearly this tight on one of my deals with my private lenders. So when it comes to borrowing capital from people, if you think you're going to need 3 months, I'm asking for 12. My kind of default options are 1 or 2 years, and I take 1-year terms on the projects that I think are going to take like 3 to 4 months. And I ask for 2-year terms on anything I'm planning on holding that I might need to refi or reposition, or that I plan on taking a bit longer. So in summary, look for people that are already involved in real estate that maybe are retiring and are no longer finding deals to see if they want to partner with you or fund your projects. Second, as a real estate investor, always make sure that you have multiple exit strategies. You might plan on something being a flip, but it might not quite work out that way. And should you need to hold it, we want to make sure that the place can cash flow. Maybe that's a conventional rental. Maybe it's something like a pad split or an Airbnb. Third one we got, not quite related to private lending, but just real estate in general. Make sure that your compensation plans make sense. If they scale up, if they scale down, if your costs as the business owner increase or decrease. It's a lot easier to have these conversations prior than trying to walk back a comp plan where you might have overextended yourself. In my personal experience, I've never had an employee want to do more work for the same amount of money or the same amount of work for less money. And lastly, in closing, make sure that you keep a tight eye on those time frames. On this particular deal, if I was the primary decision maker of it, I probably would have been dropping price pretty significantly months ago. That way I'm not anywhere near in like a back up against the wall situation. As a real estate investor, it's super important that you treat the people that invest with you very well. This gentleman has funded multiple projects for me, more than I can count at this point. He's gone into new markets with me, new partnerships. All I've done is just pay him his money as agreed, and he's been an absolute blessing to our business as well as my personal family. The best source of new private lenders is your existing ones, asking them for referrals. If you treat people how you want to be treated, particularly when it comes to their money in real estate, you're going to go far. Thank you guys for taking the time to watch today's video. If you haven't already, be sure to like and subscribe. That helps us out with YouTube, gets us in front of more folks like you. If we haven't met, my name is Ryan Dossey. Thanks for hanging out. Appreciate your time.